Black House family, we are printing, we are printing, we are printing, and I'm gonna say it again: we are printing, fam. If this is your first time coming to our page, welcome. My name is Trey Highpower. People also know me as 500K Trey. My real name is Travion Brandon, and I am the head portfolio manager here for Black House Managing. Okay, now what I'm getting ready to break down today is going to be it was a very good trade that we took. It's basically the same trade that we took a couple of days ago here on GC, which is gold. And this is going to be our primary asset that we trade here at Black House Management. We only trade commodities, futures contracts. The first contract that we trade is GC, which is our primary, and then our secondary is CL, which is crude oil. However, we're going to be talking about GC today. Okay, now here at Black House Management, we have a system, and our system is called the Confluence Profile 500K Model 1 of 1. Okay, and the overview today is going to be talking about the GC quad session liquidity high hunt, and it was a lower time from entry confirmation, and this trade ran for plus 4R 21 points. So it was a big move, a big trade today here on gold. All right, so please, if this is your first time, follow the group. I'm gonna drop all the descriptions in. I'm gonna drop all of the pages to follow on X, on Telegram, and on Instagram. Okay, like and subscribe, and let's get down into the video, fam. All right, so the market playbook breakdown. Okay, now whenever we approach our desk, when I approach my desk, okay, as the head portfolio manager, I have one job. My profession is to manage the downside cost of printing high side returns. Okay. And when I say my profession is to manage the downside cost, right, I am always looking to protect the portfolio. My job is to protect the company. Okay, this is why we trade. We're here to protect the portfolio because this is why we're in business. Nobody goes into business looking to lose money. Nobody says, wake up and says, all right, listen, I'm trying to see how much money I can lose today. That's not why we go into business. We go into business to make money. Okay, and when it comes to management in the financial risk, in the financial markets, our job is to manage the downside cost of printing high side returns. Okay. I like to say becoming profitable in the market is a choice only chosen by the profitable. Okay. It's a choice to be profitable. Okay. It's a conscious effort that we make every single day to be profitable. And it starts with managing the downside costs. Now, a key model that we like to also implement here at Black House Management: a small window of opportunity, calculated risk to reward. Okay, we focus on the small window of opportunities, calculated risk to reward. I'm gonna say it again: small window of opportunity, and we need to have patience for the return. Let's get into it. So the structural setup today, okay, as you can see, I took the screenshot here 1 minute before the auction open. Okay, everybody knows we live on the West Coast, so our auction open is going to be 6:30 a.m. as we are 3 hours behind the East Coast. Okay, so 6:29 is when I took this screenshot. All right, so GC. The GC 15-minute time from here for NY Open. Let's wait for our small window of opportunity, calculated risk to reward. We have quad session liquidity highs above the value area high. I will be looking primarily long today for a lower time frame entry confirmation and target major key level 4.25K. So as you can see here, we have our session volume profiles. Okay, Asia, this was Sunday's open. As you can see, Sunday, December 7th, 2025, 3 p.m. market open. Okay, we created a high, we pushed down. London. I always get that. I always be getting that messed up a little bit. Please excuse me. So now we have the value area. We created the value area high. Okay, we push down. London pushes up into the value area high. We respect it. New York opens here, 5 a.m. Pacific time. Okay, and we failed to sweep London. London failed to sweep Asia. Okay, so now this is tri-session liquidity highs. Let's get into after New York yesterday. Asia opens, we push into a major key level, 4.25K. Buyers develop, we rally huge up into yesterday's volume point of control slash the value area high. Okay, but we failed to sweep yesterday's New York, London, and Asia. Okay, London respects the value area high. We respect yesterday's volume point of control, and we respect these highs right underneath the major key level 4.25K. We push lower. New York opens up. Now we're trading around the volume point of control. So what did I notice? This is why this is what I said earlier. Okay, this is the GC quad session liquidity high hunt. Why? Because we have one high, two high, three high, four high. We have four, which is quad. Okay, we have four quad session highs that need to be swept. All of these highs are being respected, okay, and they have yet to be swept. This is what I noticed coming into the market today. All right, and as you can see here on the CVD, we pushed up aggressively, okay, above zero, which is the equilibrium, okay, and then we're slowly starting to push lower, okay, and this is where we enter the market. That's why I have this huge focus point circle here, okay, and we're trading basically we're trading in between the value area high, the value area low currently right now at the 6:30 auction open. All right, so if you don't have GoMoon.ai, it's a pro economic calendar. I suggest you go and click the link and go and subscribe. It's a very good economic calendar. Today we had news come out at 7 a.m. We had Jolt job openings for September and October. As you can see, the US dollar was expected to be bullish on both openings, both news releases, and they said the gold was supposed to be bearish, and that is exactly what ended up happening. Okay, so as you can see, the estimate was for 7.2 million for September and 7 million for October, and they both performed better. So the actual was 7.6 for September and 7.67 for October. All right, we also had a news article. Okay, I leave all the links for the news article at the top. All you have to do is click the link, and then you will be able to go to these news articles. Okay, so this news article was by Trading Economics here on TradingView. So the gold traded above 4,200 per ounce on Tuesday as the market priced a likely 25 bips cut this week, even though fresh labor data clouded the medium-term policy outlook. Job openings rose to about 7.67 million in October 2025, which together with the recent payroll signals gives the Fed reasons to stress data dependence even if a December cut is widely expected. Okay, futures markets place a near certain chance on a 25 bit move this week, which keeps which keeps the immediate path for policy easing open, but leaves room for a hawkish cut scenario should officials signal a pause in early 2026. Okay, so gold holds strong after the job data. Okay, so obviously, as you can see, when the news came out, it was supposed to be an expectation of gold. All right, it was supposed to decline, as you can see here. All right, the news article came and gold held, and that's exactly what it did. Gold did hold. Okay, so let's get into it. So when we first got to the chart this morning, as you can see here at 6:20 a.m., we took a screenshot of where price was currently. It was trading underneath the volume point of control. All right, very textbook price action. We had a low, we pushed up, we swept that low, we came up to retest the value area high, we respected it, we broke underneath the volume point of control. Now we're coming slightly back to retest the volume point of control. Okay, now remember, our higher time frame bias is long because we have all that stacked. We have those quad session liquidity highs. Okay, so let's just remember that. So the liquidity map. All right, 5:30 a.m. pre-market NY, we had an ascending internal range liquidity trend that was being respected by buyers until we hit the 5-minute supply, and at 6 a.m. we pushed lower. We swept, pushing lower. So right here. This is that 5:30 a.m. candle. As you can see, 5:30 a.m. The 5:30 a.m. candle, we hit this volume point of control, and then we started to rise. We buyers created this internal range ascending liquidity trend line. Okay, we push lower, we rose into this 5-minute level of supply. As you can see, I drew the zone out. Okay, we respected this level. Okay, and at 6 a.m., as you can see right here, as I said it, at 6 a.m. we swept, pushing lower. At 6 a.m. this candle, we swept this internal this liquidity trend line that was building, and we came and swept this 5:30 a.m. low. Textbook market structure. We pushed lower. Okay, 6:30 auction open. Buyers rallied, retesting the bottom side of the internal range liquidity. We had a slight reaction back down, retesting the volume point of control, and we reclaimed higher, pushing towards the value area high. Okay, so 6:30, we push higher, we rally up, we come and retest that bottom side of that internal range liquidity trend line. We had a slight reaction back down, coming to retest the volume point of control, the VPOC. Okay, and we reclaimed higher, pushing towards now the value area high, as you can see right here. Okay, this is what we have to understand. The session volume profile is a high key component in our system for the CP500K model 101. All right. So 10 minutes before news, because we all know the news came out at 7 a.m. Okay. So as you can see, the news was supposed to come out at 7 a.m. All right. So at 6:50 a.m., 10 minutes before news, 6:50 a.m., we had a value area high fake breakout, stopping out all early buyers who entered early off the 6:30 opening candle. Okay. So it's right here, what did I say? Did I say 6:55 or 6:50? 6:50. Okay, 6:50. This candle right here. As you can see, this candle, buyers tried to get aggressive. Okay, and we tried to establish value higher. All right, trying to look for higher value above the value area high. It was met with immediate resistance from sellers. This was a fake out, and we immediately traded back into rotation, stopping out all of these buyers. Okay, stopping out all of these buyers who entered early off the 6:30 opening candle. So this right here is a 6:30 opening candle. Look at this big bull candle. This is when I said we came to retest that bottom side of this internal range liquidity trend line. We retested it, slight reaction back down into the volume point of control. Buyers developed, we reclaimed strength, pushing above the value area high. This is a fake out. Okay, this is a fake out, and we traded back into rotation, stopping at all of this buying. Okay, all of the buyers that were long right here, we was a fake out, and we retraded. 7 a.m. news came out, and we traded back lower. Okay, stopping at all of that buy momentum that entered right when the 6:30 auction opened. Okay, 7:10 a.m. Notice the big red bubble in the triple stack selling imbalance volume that entered as we hit the value area low. The time and statistics went from negative 255 delta at the 7 a.m. candle to positive 135. The max delta constantly started rising from 2 to 5, then a big jump at 7:05 a.m. to 142. All right, so let's look at that. All right, 7 a.m. 6:55. All right, 7 a.m. candle. All right, so when the news came out at 7 a.m. Okay, look at the max delta. The max delta went from just 2 to 7 a.m. to 5 to now 7:05 a.m. to a strong 142. What does that mean? That buyers are starting to become more aggressive. Okay, buyers are starting to become more aggressive. As you can see, this is relative. They're not there. They're not present. But at 7:05 a.m., buyers really start to get aggressive. I apologize. This is the 7:10 candle. At 7:05 right here, buyers really started to get aggressive. Why? Because we started to hit the volume point of control again. Okay. And then this was a silent, and I'll show you in the next candles. This was a huge ice pool of buyers just waiting right here. As you can also see, why are they starting to get aggressive? Why? Because we're hitting that the VWAP, okay, the volume weighted average price. Okay, we're hitting the green VWAP right here. So this is why buyers started to get aggressive here in this candle, because we hit the volume point of control and the VWAP. In the next candle, it jumps to 191. Okay, the delta went from, in this candle at 705, from a negative 255 into this candle to a positive 135. A huge delta flip. A huge delta flip. Okay, and this is why it's important for us to pay attention to the timing statistics, because the timing statistics are showing us the intention of the aggressive buyers and sellers in the auction. This is why we read the order flow, because it helps us to understand where are the intention of the orders going, bearish or bullish. And as you can see, right, if we just want to look at price action, you can see the black tags. These are the point of controls, rising. Okay, then they drop. Then they started to rise higher. Okay, then they're coming back down to retest this ice pool of buyers right here. Okay, this ice pool of buyers, all these point of controls, this is where a lot of buyers are sitting. Why? The volume point of control is right here. We have the volume, we have the VWAP right here. Okay, we also have the value area low. So this is a huge ice pool of buyers just sitting right here. All right, so at 7:05 a.m. to 142, then 191, 107, then skyrocketed to 472. Okay, so I'm talking about the max delta. The max delta went from 2 to 5 to 142 to 191, 107, and then it skyrocketed to 472. As it skyrocketed, look how price is starting to shoot back up. Okay, trading towards the edge of value, which is the value area high. Okay, this is how we trade the CP 500K model here. Okay, it's putting all of these confluences together to build a narrative as to why we're entering this market, either long or short. In this specific scenario, in this specific trade, we are going long. So we're using all of these confluences as our reasoning to enter the market long. Okay, so 7:15 a.m. the delta went from 3 to 472, strong print. The order flow shifted from weak sellers' hands to strong buyers' hands, and the buying is now being rewarded. Buyers absorption, 7 to 7:10 a.m. Sellers became very aggressive off the jolt job openings from September to October news release, pushing price back down to the value area low. Okay, so remember, 655, we tried to push above the value area high. Fake breakout. We push back into rotation, into the rotation of value. 7 a.m. we got seller. You see this big red bubble. Sellers got aggressive. We push price underneath the volume point of control. We push even lower. But look right here. We have this huge big red bubble, and we have a triple stack, a selling imbalance. Why? Sellers really tried to get aggressive underneath the value area low, looking to purge these lows and break underneath the value area low. Despite all the volume, there was no complementary order flow. When I say complementary order flow, I want to break down what that means. Okay, sellers are doing their best to purge lower. Okay, if they're doing their best to purge lower, but the price of gold is not moving lower, then what does that mean? That means all of that selling pressure is being absorbed by a bigger buyer, or by a numerous pool of buyers passively who are aggressively hitting the market, and passive bids are being filled, and we're taking this market higher. Okay, the order flow shifted. I apologize, I already put past that. Despite all the volume, there was no complementary order flow. Buyers absorbed all of the selling inside the 4220s to 4218s. The 4220s are right here. The 4220s, okay, and the 4218. So right here, okay, all of this selling that sellers are trying to do is being absorbed. Sellers are trying. That's why you see this red bubble and this red triple stacked selling imbalance. Why? Because they're doing their they're aggressively hitting, trying to sell and purge this market lower, but It was no follow through. It was all absorbed by buyers and the market rallied. As you can see right here, the delta went from negative 255 to a positive 135. Okay. We wicked it. It was a strong wick out. We wicked in there and we wicked out. Okay. A strong wick out. What is this signs of? Buying distribution coming to the market. All of the selling in here is being accumulated. We're pushing higher. Accumulation for the bigger move up. Remember, our narrative for today is long because we have quad session liquidity highs above the value area high / major key level 4.25K. Now, our entry confirmation was a 1 minute break above the silent 1 minute sub X price level 4223.5. The 5 and the 15 minute candles were both strong in our favor. Okay. And I entered right here. So price pushed down. Okay, off this 5 minute candle, we pushed back up into this zone. Once we broke above this dotted blue line, which is the EQ level of this zone, okay, we broke above the volume point of control. Okay, we wicked the VWAP. Okay, the time statistics, we had strong ask, okay, at 1100. The delta was in our favor and the max delta was in our favor on this candle. The next candle, we printed above and we closed above. I market executed. Okay, we closed in full strength of this candle and the point of control was at the top of its the point of control was at the top of the body and we closed above the point of control. I market executed looking to target 4250. Okay. So this was the 1 minute sub X level that I was talking about. So we pushed lower, we came up to retest obviously the bottom side of this low. We pushed down, we pushed up, we broke that, we came back down to retest this level, we pushed down, we respected it. I apologize. Let me go back. We respected it, we pushed lower, okay, and then we pushed up. So now this is a 1 minute sub X level. So we draw this line out. As you can see, price came back down to this 1 minute sub X level, and then we immediately rallied up. Okay, this was that 6:30 a.m. This was the New York Open auction open. We rallied up. We came to retest the bottom side of that liquidity trend line. We pushed back down. This was obvious. This is also the VWAP level. We came back down to retest this level 4223.5, and then we rallied up. We came down after news. News came out. Okay. News came out, we pushed down. As you can see, we have this huge level into the market. Okay, this was a huge level where buyers were looking to buy. As you can see, that's why it's highlighted so big like this, because it's a huge level. A lot of contracts enter the market right here. Okay, we pushed lower at 7 a.m. news. We kind of basically range, and then we broke this level. Okay, and then so remember, look at this big red candle. It was met with no complimentary order flow. All right, this is red because sellers tried to get aggressive right here and break these lows. Okay, but buyers defended it well. Okay, this seller is now trapped. This is a trapped whale right here. We trapped his ass. All right, he got trapped. We broke above. Okay, this key level 4223. We broke above this level. We candle closed above. We came back down. This is textbook now, family. Textbook break and retest. Okay, we came back down to retest this level on this next candle. We came back down to retest it. Small little indecision candle. We had a huge bull candle. Okay, huge bull candle that closed at the top of its strength above the retest candle. Once we got this was 7:15 a.m. Everything lined up perfectly. This is a 7:15 a.m. candle on this 1 minute candle, and our market executed immediately because we came back down to retest. Okay, we came back up into this zone. All right, and this zone failed beautifully, and now we're going long. Now the market is going to reward all of the buyers. The order flow has shifted. Okay, the order flow has shifted. Okay, from bearish. Now sellers are weak. This seller's trapped. We trapped his ass. Now we're riding higher. The order flow has shifted. We immediately market executed to take advantage of that volume. Okay, and now the auction is shifting higher. So this was before the open. As you can see, this was that silent ice pool of buyers. Okay, this is where all of the buyers were just loading up. All of these. This was that pool. Okay, as you can see, this was at 6:30 a.m. So before 6:30 a.m., we came into this zone. 6:30 a.m. Right, we rallied up off of this zone. 7 to 7:10 a.m. we returned back to this zone after the news opened up. Now remember, the news said that gold was supposed to be bearish, and that's exactly what happened, but it was short-lived. Okay, news opened up 7 a.m. and the market did drop, but it was very short-lived. Very short-lived, and then we reclaimed higher. So the news technically was kind of right. Right, but that's why I say it's a small window of opportunity that we need to be able to capitalize on. This was a small window of opportunity. The news came out bearish. Imagine all of the sellers trying to get aggressive and selling right here. I bought. Once we came back down and retested this level, I bought up. Remember, we have all of this quad session liquidity highs above here that need to be swept out. Imagine all the sellers looking to sell right here. Okay, trapped his ass. Came down here. They got trapped. The sellers got trapped right here. We stopped all of them out. This big buying came into the market. Boom. Now it's rallying. The auction is shifting higher. Okay. So this is where the auction came and returned back into. Okay. And as you can see, look how strong we wicked it though. Look how strong the buying is on this candle. 1100. The delta 135. The max delta. The max delta is how strong the aggressive buying was at one point in time in the bar. Okay, just like the min delta is how strong the aggressive selling it was at one point in time in the bar. The max delta is rising from 2 to 5. Okay, right here at the 705 candle, 142. And then when we wicked into this zone, okay, look how strong the aggressive buying was, 191. Okay, we came back into this zone and we immediately had a strong rally out. All right. Now, 42.26 was a big level also, okay? So as you can see here on the 15-minute time frame, as you can see right here, this is the 15-minute time frame. We pushed down into this level. Look at all this. This is this huge seller, and we trapped his ass. Okay, this is a trapped well. We trapped him in here. He tried to sell coming back in here off the news, okay? The 7 a.m. news, he tried to sell. Huge seller came in here. We trapped him. Okay, he got trapped inside the ice pool. Okay, and the market immediately rallied up. Okay, look at the selling imbalance: 28 on the bid, only 6 on the offer. 40 on the bid, only 11 on the ask. 34 on the bid, only 13. Okay, but look, 47 buyers bidded right here, and only 27, only 22 at this level. Okay, and we rallied up out of here. Look how aggressive they tried to become. Okay, the bid went from 2100 to 3400 in this candle. The delta went from 43 to a negative 293. Now remember, when I say no complementary order flow, if all of this selling was huge in this candle, obviously this is off the news, right? And there was no complementary order flow. The market can only go two ways, fam. It can go up or it go down. There's only two people in the market. There's buyers and there's sellers. All right. It can either go up or it's going down. Otherwise, we're ranging into a sideways market. Okay. Sellers are trying to purge this market lower. The market did not go lower. So what does that mean? We're taking this market higher. 42.26 was a huge level. Okay, this was where the market dropped at 7 a.m. We ranged for a little bit, and as you can see right here, we had 202 sellers here on the 15-minute time frame. 202 sellers tanked this market even lower. We only had 29 on the offer. Okay, the volume was 231. Okay, at 42.26, this was a huge level. Okay, this was a huge level. Okay, we wicked here. We came into this zone, we wicked out, and once this 15-minute candle closed above 42.26, okay, we broke above and we closed above this huge level right here. This was a huge confluence for me to enter. All right, this was a huge confluence for me to enter because you can see All right, if this was being respected, you see we have a triple stack selling imbalance as well. If this was being respected, it would have bounced and it would have came. Sellers would have resisted, and when we would push lower, but it didn't. We came, we broke. We pushed back into this level. We broke this triple stack selling imbalance. We broke above this key level right here, and we closed above. All right, I was all in, and as you can see, the market is just rallying in our favor now. Okay. So the key confluences to enter long, we had quad session liquidity highs above the value area high, major key level 4.25K. All right, we had a failed breakout early New York session and traded back into value rotation, building buy strength 7 to 7:10 a.m. News came out bearish here on GC, which is very short-lived, as sellers did their best to purge lower, unsuccessful with no complementary order flow at the value area low. Buyers developed again with the stronger hand. The 7:15 a.m. candle closure was our entry as we broke above key level 42.26. Remember, I just talked about this. Okay, 42.26. This was a key level in the market. It was a lot of volume being traded around this key level right here, 42.26. Even though it was silent, it was something that we paid attention to. All right, 42.26. This price level attracted a lot of volume in the auction today. I entered once we broke above the 1 minute sub X price level 42.23.5. We retested this price level and instantly rallied higher. I market executed with a 5-point stop targeting 4.25K. Okay. Market executed. We pushed up into the value area high. We came back down to retest this zone. I managed to partial secure one contract off the table, and then I just left the remaining 2 contracts in the fight towards our target 4.25K. The market rallied. Okay, as you can see, I'm still long 2 contracts. We pushed back down into this zone, and then we came and we reclaimed above the value area high. Look how many times we tried to break this value area high. We pushed up. We got smacked down. We pushed up. We got smacked down. Now we're coming. We're fighting again, trying to attack that value area high, looking to establish value at a higher price level in the auction. Okay, and that's exactly what happened. All right. Market continued to rise. Okay, I managed to partially secure one more contract. Now have my last final contract off the table. Then I went to go ahead and I started trailing my stop aggressively. Price started to rise. Now we're sweeping that. Now we're finally sweeping out that liquidity. The Asia high, New York high, London high, both London highs. Okay, now this is where we're sweeping out all of those liquidity highs. The quad session. Okay, I trailed my stop even closer, looking to hit target 42.50. All right, beautiful trade. This is we're floating roughly about 20 to 21 points right here. Beautiful trade. Okay, as you can see, now this was our entry. Okay, and this is what we were targeting. Look how we're just purging all of this liquidity now, as predicted. This is exactly what we said price was going to do, and it did that. Look at the CVD. The CVD rose beautifully. Okay, it rose. We came back down, had a small retest of this internal range liquidity, and then we just shot up to the upside. Look at all this strong buy volume. The strong buy volume was rewarded, obviously, as you can see here in price as well, because now we're just purging all of these liquidity highs. Okay, and we hit the value area high, yesterday's value area high as well, and we hit 4.25K. Boom, we hit 4.25K. As you can see, if you haven't looked, you need to go to our YouTube, okay, at 500K Trade, and look at the charting session that we did for GC to start the week off. And as you can see, we're just riding this external range liquidity trend line, okay, on the higher time frame, as you can see here on the 1 hour. So the trade flow, price rallied in our favor as predicted and ran all the way to our original targets. Sunday and Mondays and today's Asia's, London, New York, and London's highs, major key level 4.25K. So this trade, we secured 21 points with 5 points of risk, equaling 4R on the day. We capitalized on the small window of opportunity calculated risk to reward, and managed to print a 4R return. Well done. Trey High Power. So, family, if this is your first time, once again, coming to our page, please like and subscribe. In the description, I will drop all of our socials that I definitely want you guys to go and pay attention to. And 2026 is going to be our best year to date. It's going to be our best year to date. So I'm going to leave you with this. When it comes to financial risk management here at Black House Management, our profession is managing the downside costs of printing high side returns of money consistently through any market conditions. Done correctly, well, an abundance of fruit awaits us. Trade high power, freedom and abundance to all. Godspeed. We out.